Hey guys, Joe here from Charting Star, and this is quite an important update about the DAX, the British FTSE, the French CAC40, and I will also show you the EUROSTOXX later on. I'll probably have a look at gold if I have some time left, because I got a lot of charts for you. And yeah, who follows me for the last 3 to 4 weeks, I was actually on vacation, and since we made that top at DAX at that 15,650 mark, you probably noticed that my bias was actually very bearish. And I have to say that I completely switched around yesterday because of my timing tools I use and a lot of cycles I use in various time frames. They suggested a low at the end of this week. And that is basically the main reason why I switched around. And I was triggering like several patterns, and I also mentioned that we have quite similar patterns which developed over the last 3 to 4 weeks in all different indices. And we have like a giant bullish flag channel at the CAC, at the EUROSTOXX, at the DAX. It could be also seen as a wedge, as a descending broadening wedge pattern. And I also mentioned it's actually a bit too obvious, but just while having a look at that retail sentiment, and we have to separate now the US markets to the European markets, because technically they're completely disconnected from the US market, which I haven't really seen like that before. But that is a fact, and you shouldn't really fight against that. Just do what the market actually shows you and what the market wants to do. It doesn't really matter what you want. And I know a lot of people disagree with that, because the fundamentals, all data we get, if it's any rate hikes, inflation is going through the roof, I know it doesn't make any sense. But what do you want to do if the market doesn't care about it? In the past, it has proven that the market has been always right. And if you're disagreeing with that and want to fight against that, most likely you will lose. And you actually see that in all these retail sentiments all over Europe. It's basically 80% plus on the short side. And even while we get these little pullbacks, it doesn't really drop anywhere close below like 60%. So the ratio keeps actually being at least 3 to 1, and it keeps actually being above 4 to 1 on the put side. And that could lead actually to a massive short squeeze in the markets. Even these patterns we have, these bull flags, they are too obvious. But I'll walk you through now through several charts, and we're going to start off with what happened actually last week, or actually this week. I was posting that triangle here at the beginning of the week. We had the first touch here, the second, the third, the fourth, the fifth. Here it got triggered, and I don't really like to trade these symmetrical triangles, because they like to do fake moves to either side first before they actually do the measured move to either side. And here what happened is we had that faker to the upside. I actually mentioned that on Twitter, is that another faker? And it actually was. And we dropped on Wednesday quite intense to the downside. We tried to recover overnight, but then that big drop actually started upon Frankfurt opening yesterday, and then we did that 100% measured move on the dot, and we bottomed at 15,140.40. And I made a very important tweet here. I also will show you on the daily later on, because there was also a pop gun to the downside, or about to pop to the downside. And I mentioned this looks like, or it's most likely a faker, and it actually turned out that it was. And so we did that 100% move to the downside and completely turned around. I turned around as well. I sold all my short positions between the 15 to 40 all the way I didn't get that low, of course, but I think I closed them all at the 15-200 area. And then I came up with that bullish Wilbur wave wedge somewhere here. Once we drop below the 15-200 mark, you actually can check out my timeline on Twitter. It's all on there, so I'm not like, making anything up. And yeah, we reached that target line today with that Frankfurt opening push, which occurred right at 9 o'clock German time, and we hit that target line very, very nicely. Here's, by the way, a daily chart. This is not a cash chart. This is future price levels you see here. And I was posting that on Wednesday evening. I mentioned that we still have that inside candle. So this candle is still within this candle. This one was actually another inside candle of this one. And this one here as well. And this one here actually triggered a so-called pop gun, which means this one here in the middle is completely embedded between this one and this run from bottom to the top. And then the day after, excuse me. So here's the day after, and that was yesterday. And I was triggering, as long as DAX stays within that channel here, in that with these dotted lines, that pop gun attempt to pop to the downside is most likely a faker, and that's what actually happened. It went all the way down here to the channel barrier or boundary, and then it turned around completely, and we got yesterday actually with that daily candle a very nice looking hammer, something very similar to this one here. And we're going to hop straight into the current chart. So here's the current chart. You're seeing that candle from yesterday. As I said, it completely turned around. We got a very nice hammer candle, and today it looks like we get a follow through day. And it's trying already to make that pop gun move to the upside. And if we duplicate that move here, that measured move to the upside, we should end up at that 15,700 area. If we get 100% duplication, there can be a 200% duplication, a 300 duplication. And while DAX is doing that, I gave you here that descending broadening wedge pattern. We have like a high, a low, a lower high, a lower low with that low from yesterday. And if we make that third touch now on that slightly falling trend line, it's going to be a descending broadening wedge. And also keep that blue box here inside. That is the inside candle, and once that thing usually pops in combination with that pop gun, as I said, that could be an intense move. And just while I give you here that measured move, that is the 100% measured move for that descending broadening wedge. If we make a touch here, third touch on that falling trend line, that could get us somewhere into that 16,100 area, and that is not really far away from the all-time highs we made at 16,300 at the beginning of last year. So yeah, keep that in mind. That could be a massive squeeze, as mentioned before, considering here this daily chart. And we're going to stay with the daily charts. This is my inside candle daily chart, and I just want to show you how these inside candles usually triggered a quite big move here to the downside, here another one to the downside, and here it actually triggered that whole rally like once, twice, a little pullback, but then the third time to the upside. And here in red I marked you the ones which actually didn't work out. So we just had a shooting star reversal here, so it was just a faker. Then it triggered another inside candle, came up with another shooting star, and it didn't work out, and it made another inside candle, and it didn't work out a third time in a row. And now we have that quite large inside candle again. And yeah, we have to wait what's going to happen next. Here you actually see that really big gap we have from today on. And usually when that happens, or let's put it this way, if DAX is not able to close that gap within the first hour, this gap usually stays open for a while, like what we had here and what we had here in that entire rally. That could stay open for quite a bit. And this is actually one of these signs where a whole new move to the upside could start, just considering that gap. And here's another cash chart. Oh, it's not a cash chart, it's from it's a cash chart actually. And you see that very nice rising channel here. And DAX stayed within it for quite a bit now. And here I gave you that range. We tried to pop now, or we tried to break that range to the downside like once, and we had a second attempt here. And yeah, most likely he's going for an attempt now to the upside, which means he needs to break that double top we made here between 635 all the way up to 658, I believe it was. And if he does so, the measured move to the upside, 100% duplication of that range, would get us into that 16,000 area. So yeah, that would also work with my new theory. And we talked about that for quite a while in the past, that expanding flat correction. And I have to say, or I kept saying, let's put it this way, we have a max extension for the technical limits of that correction level, and that is 15,885. So as soon as DAX breaks that level, we should not be that bearish anymore. We still have that negative RSI divergence, and it's another possibility that we actually make another high here with that RSI divergence, and that might be the top. That's also, of course, a possibility, but there might be also the case that DAX is breaking that divergence and is just going to other or next extremes. Yeah, and before we continue with the timing charts, I got this one here for you. What you see here is a falling triangle. I was showing that many times before. We got that starting point here, the second touch, the third, the fourth, the fifth, which triggered that formation. We got that fake move to the downside. And who follows me for a while knows that I was actually very bearish down here, and I got my butt busted, and then it went all the way up and hit that minimum target, the statistical target, at 15,634. So almost on the dot here with that high. And this formation has still 100% target, which is a 100% measured move from that top to that low, which waits at 17,062. So if this is going to happen, that expanding flat correction I just showed you becomes invalidated, of course, and we have to rethink, or we have to readjust what that thing is. This is not going to be a C leg or a B leg before that drop occurs. Then this has to be something else, and the only alternative is actually an impulsive count. Which would lead us either, this is going to be, this was a 1, 2, 3, 4, 5, and this was a B leg, and that would be the C target right here at 16,604, or this is the first wave of a complete new impulse, and we are already in the third wave, and no one is really noticing that. And that would mean if this was a 1, 2, 3, 4, 5, and this is a 2, and if this is the third of the third wave, guys, this is going to be crazy. Usually these wave 3, they usually end up between the 127 and the 161, which would mean we end up somewhere between 17,369 all the way up to 18,342. It's a possibility just concerning Elliott waves. To keep that in mind, that these are potential targets. You also can subdivide it into, if this is an A, B, C to 17,017. So it always leads into these areas. And if this was a first wave of the third should end up here somewhere between, we actually can put the 127 in here as well. And that should get us also somewhere between the 15,525 and the 18,171. But as I said, we can consider this if DAX is actually going through that 15,000, let's make it 15,916K, if that is the case. And I'm going to show you probably the most important chart over the last 2 months. This is an H4 time frame based on cash levels. And I want you to pay attention particularly on these projections I put down here. It's a model I developed myself, and it's actually it's amazing how these work. They don't give you price levels. I put them down here for purpose, so you don't get these price levels up here, because most people actually get confused and say, hey Joe, it didn't run all the way up here. It's just about, that thing only gives you a low or a high, and it's actually pretty good in determining if it's a higher high or a lower high, or a lower low or a higher low. And it gives you the timing when these highs and lows are actually happening. And once you have a look down here, when that thing started, it said, oh, we should push to a higher high, higher than this one here. That's what that model is saying. Then a pullback, and then another higher high, and that's what actually happened. And then a quite sharp decline into that low we made here on the 10th of Feb. And then it wanted another rally with a lower high, lower than this one here. That's what happened. And then it wanted to have a double top kind of formation. It went a little higher, and then we came down, and another rally was actually suggested, but below these tops we made here. So that means between these two, and we actually topped out just below these levels, and we came down, and this one actually wanted to have a new low, and that's what happened last week. And then it wanted another rally with a lower high, and then another lower low, which occurred yesterday. And as you can see, that model actually suggests that we are running up with a higher high, pull back, and we should end up at least at the 650 level or even higher. So that cycle actually was giving you basically all information you needed, not price levels, but timing wise, it was working very, very well. And the next timing chart is out of the daily, and you have two different types here, that blue and that red one. And here's the other reason why I think we found a bottom yesterday. First of all, I will show you on the weekly as well in that timing model. But I want you to pay attention on this blue cycle here, which suggested actually a low on the 1st. And this is a daily chart. It won't give you the exact day. Sometimes it works out, but you have to give it a tolerance plus minus 3 to 4 days for a certain bottom. And even this one was just a tiny pullback. That low here, as I said, suggested it on the 1st of March, and we pulled back to the 45 MA moving average. And now listen carefully. That whole move here, and I think we were on week 21 or 22, we will check that on the weekly in a bit. The minimum pullback level for primary cycle is actually the 45 MA. And usually what happens, they spike below that 45 MA and then it pulls up. And it just, went right on it, and that rally started. What could happen is that current primary cycle is still extending, and we are running into a pullback into that red cycle at the end of March. That is actually my main bias, that we top out at the end of March still. Don't ask me about the price level because anything can happen there. But timing wise, we could see, and as you can see, that red cycle actually started down here. It gave us pretty much the significant pullbacks, and that might be the case also this time, that we run into a low at the end of March, and that might be just a little pullback, like to a retracement level. Depends where we top out, or if we topped out already. That rally could also fail and we pull back to that 38, or to reconfirm these highs here. That might be a possibility. But that blue cycle, which usually gave us these tiny pullbacks, this one here, this one actually triggered a new rally after that tiny pullback, and this one also actually was, I think that what that overnight move we had. These are future price levels, by the way. That overnight move before that, insane rally started overnight. And now it's suggesting here that same, probably tiny pullback, the same we experienced right here. That could be the case right now as well. And we hop into the weekly. And once you have a look at the weekly, you see what I mean. I want you to pay attention to that purple cycle here. First of all, it started at that low, and I'm pretty sure that thing shifted. This one suggests a low between the 15th of May. So that's the start of the week of the 15th. If that cycle shifted, and we have to give it time all the way to mid-June. But once you subdivide that purple cycle into 3 subcycles, you probably notice that this one here was suggesting a low this week, and probably yesterday was a perfect spot for it. So that was my 3rd cycle actually suggesting a low for this week. And since it's a weekly, it's not as accurate as a H4 or the daily time frame. And as you can see here, this was 20, 21, 22nd. So it's a 22nd week, and that could be a very bullish consolidation in a primary cycle. And the new one is about to start. And that would be the most bullish scenario. If this is a start of a new primary cycle, then yes, that scenario I gave you is probably going to happen. I would just go back into an H1 time frame because I forgot about that with a wave wedge here. It's a cash chart, and I was triggering that yesterday somewhere here, and I also mentioned that H1 candle. I said that hammer candle is a statement of the bulls. Here you see that runaway gap, and we need to break through that 480, 550 area actually to reach that target line for the bullish case. I was triggering that also. I gave you that information, and as you can see, we are just breaking through a little, kiss and fly away, and then that range here will be important, these highs. I was mentioning that we probably could build a shoulder formation. We still could do that with a slightly rising neckline, but I also want to show you my level chart. It's also a cash chart. It's a 1 hour time frame, and here you see how precise actually DAX made that slightly falling bull flag, and it hit that boundary here on the dot yesterday. And in case we don't do that double top here, like a triple top, we broke through that already for potential neckline of an inverted shoulder head shoulder pattern. That could be a vertical move as a V-shaped bottom here. So you have a W-shaped bottom, which is actually a very, very bullish sign. And we had that already at the lows we made in September at DAX. And another bullish Wither wave wedge occurred. You don't see that at the performance index. You only see that in the course index of DAX. And while having a look at this target line here, as you can see, it's actually getting confirmed and reconfirmed all the time. That would actually trigger from, let's see that high here, another 1.6% rally. And if we take that here at DAX, another 1.56%, that would get us actually to the 15,700, 15,800 area. To keep that in mind. The course index is sometimes a very good tool to reconfirm with a performance index, and I know most people actually don't look at it, but yeah, it could be, as I said, it can be very, very useful. And here is another bearish pattern I was showing for the last couple of weeks, a so-called bearish cipher, and I'm not that familiar with harmonics, and I don't really like those because I learned once, or I figured actually out myself, they like to be in Forex pattern, and they like to work there much, much better than in indexes. But the level which shouldn't be busted is 15,758 for that formation. Once it gets above it and it keeps going, that thing becomes also invalidated. And yeah, and last but not least for the DAX is my latest tweet from today, that inverted shoulder, head shoulder. These things are usually occurring at the bottom, which is the case. And while having a look at these targets, they are both at the all-time highs. This one is 380 points above the all-time high. The 100% measured move would get us to 17,500. It hasn't done any kind of pullback or like back test of that neckline. That might still occur before that thing fires to the upside, if it fires. I have to admit, I was actually twittering that as well. I didn't really believe in it at all like 2 months ago, but I kind of changed my point of view. I'm not saying it's working out. I still have my doubts, don't get me wrong, but latest, once we get through these all-time highs, I'm pretty sure we will get these targets. Let's put it this way. Or anything above 15,800, 15,900. The chances or the odds are pretty good that we hit the all-time highs at least. And remember, DAX is lagging behind the other European indices. The FTSE made already all-time highs. The CAC is right there. So, and we're going to jump right over to these now. I'm gonna show you the EUROSTOXX 50 first, because this is what a perfect bear trap looks like. You see here that slightly rising trend line, which is also a neckline of a shoulder, head, shoulder pattern. And this thing got triggered right here. It made a perfect touch on that trend line. And I don't want to know how many bears or retailers got trapped down here. For myself, the only tool I had was timing to not go into that trap. And what the result actually out of it was that this descending broadening wedge just made a very sharp pullback after it got triggered right here. Now it's on its breakout via gap. And the targets are just below the all-time high at 4,379 and 4,403. This is a 4-hour time frame, by the way. And I got the weekly and the EUROSTOXX as well for you. this is a log chart, and that could be the result of it once we make new all-time highs, because that rising bearish Wolver wave wedge gets triggered once we make a new all-time high. It doesn't has to hit that upper trend line necessarily, but if it's turning to be out a very nice Wolver wave, it's getting up here, and it's probably making 100% move of that first rally we experienced already. So yeah, keep that in mind. Once we make new all-time highs at the EUROSTOXX, that thing is triggered. And also have a look at that target line. Got already confirmed down here, so I'm pretty sure that line will be hit one day again. Yeah, the CAC40 is actually very similar to the DAX. It is a 4-hour time frame here. We have the same precise flag what DAX has, and the CAC is actually a bit further. First of all, it made already a double top at the all-time high at the beginning or at the middle of Feb, and now it's already at that upper boundary of that channel. And once that breaks out, we also have like a descending broadening wedge formation, which did yeah, the third touch here already. So the targets are actually 7.529 and 7.567, which would mean we also will hit new all-time highs at the CAC40, and this would actually fit into our weekly count, where we have a clear 1, 2, 3. That should be the 4, which stayed above the 1, by the way. And we are on that resistance zone I gave you already 2 or 3 months ago. And that would fit into higher levels in here. We are quite late in that cycle. As you can see, that cycle actually worked out quite well in determining these lows. Here we were a bit off, like twice a bit late. Here we were a bit early. We got the Corona low pretty accurately, but we could do another rally quite late into that cycle, and this cycle suggests a low in the middle of May. Yeah, and last but not least, the FTSE. I think the last tweet I did is when we did these 2 retests on that neckline, and now it broke through again. However, as long as we stay above that line, that inverted shoulder pattern is still valid, and these targets remain at 8024 and 8053, statistical target and the 100% target. And once we zoom out here a bit, I also gave you that bearish Wolver wave wedge. I was actually trading that, but I dropped my positions yesterday here as well with that pullback. After we did that, after we got that tail, I completely dropped my positions. So, which doesn't mean we could still run all the way down here to that target line, but this inverted shoulder head shoulder pattern actually looks quite nice. So yeah, right now I would prefer to run up before going down, but that's a different story. Well, we have a look on the weekly here. It looks very similar to the CAC40. We have a 1, 2, 3, and then a long 4, which took almost half year. And we formed that descending broadening wedge, which is on its breakout. And the absolute minimum got basically hit here at that 61.8 extension, which also made new all-time highs. And once we move back in time, that all-time high is actually out of 2018, I think. But these targets here, they remain still open at 82, 81 and 84.22, and we are only like halfway through that cycle here. So there is still time to run up even further, and this one here wants a low at the end of June. That's for the British FTSE. So that's about it about the European markets. I hope I helped you out a bit. And I wish you all the best and have a great weekend. Thanks for watching, and yeah, wish you all the best. Bye.